Have you ever wondered how the biggest investment company in the world was built? Well, our story begins in the year 1988. The place? A small office in New York City. 5 ambitious figures: Larry Fink, Robert Capito, Susan Wagner, Ben Golub, and Keith Anderson pooled their resources, a modest sum of $5 million, to lay the foundation of what we now know as BlackRock. This quintet, each a powerhouse in their own right, was drawn together by a shared vision to create a company that prioritized risk management and fixed income. At the heart of this vision was an unshakable belief that understanding risk was the key to long-term investment success. They believed that by managing risk effectively, it was possible to provide clients with the most reliable and consistent returns. Larry Fink, the man who would become the face of BlackRock, was a seasoned Wall Street veteran. He had learned from his experience at First Boston that understanding risk was crucial to survival in the financial industry. This philosophy, born from the ashes of his previous failures, became the guiding light for BlackRock's initial focus. Alongside him, Robert Capito, Susan Wagner, Ben Golub, and Keith Anderson each brought their unique expertise and perspectives to the table. Together, they complemented each other, forming a strong, cohesive unit that was ready to take on the world of finance. Despite its modest beginnings, BlackRock's approach quickly gained traction. Their focus on risk management and fixed income, at a time when these areas were often overlooked, set them apart from the competition. Clients began to take notice, and money started to flow into their newly established funds. The result? A resounding success. By the end of its first year, BlackRock had $1 billion under management. This was not just a clear sign of the company's potential, but a testament to the power of their vision, the strength of their team, and the effectiveness of their approach. It was an early indication that BlackRock was not just another investment firm, but a company poised to redefine the landscape of global finance. From a startup to a financial powerhouse, BlackRock's journey is one of resilience and innovation. As the 90s dawned, BlackRock found itself in the midst of a rapidly evolving financial landscape. The company, however, was not daunted. Instead, it saw opportunities. Opportunities to expand, to innovate, and to provide solutions that would not only meet, but exceed the expectations of its growing client base. In the early years of the decade, BlackRock primarily focused on the fixed income market, but as the decade progressed, the company started to broaden its horizons. It expanded its product offerings to include equities, real estate, and other alternative investments, a move that not only diversified its offerings but also its clientele. BlackRock's reputation as a trusted advisor to institutional investors grew stronger with each passing year. It was not just their impressive product range that won them this trust, but their unwavering commitment to putting their clients' needs first. In the year 1997, BlackRock made a strategic move that would catapult it to new heights. The company acquired Mercury Asset Management, a leading UK investment firm. This move not only expanded BlackRock's global footprint, but also quadrupled its assets under management. This acquisition was a game-changer for BlackRock. It not only gave the company access to Mercury's vast network of clients, but also its expertise in equities and international markets. With this, BlackRock was now in a better position to serve its clients across the globe. By the end of the 90s, BlackRock had grown exponentially. From a startup in the late 80s, it had transformed into a global giant, managing over $165 billion in assets. It had established itself as a trusted advisor to some of the world's largest institutional investors, and was widely recognized as a leader in investment management. The journey of BlackRock in the 90s was not just about growth and expansion. It was also about resilience, innovation, and a relentless pursuit of excellence. It was about a company that dared to dream big, took calculated risks, and was not afraid to disrupt the status quo. By the end of the decade, BlackRock was managing over $165 billion and had truly arrived on the global stage. The true test of any financial institution is how it fares in a crisis, and BlackRock faced its first major test in 2008. In the midst of a global financial crisis, many companies were faced with insurmountable challenges. Yet, amidst the turmoil and uncertainty, BlackRock demonstrated resilience and strategic foresight. The world watched as markets tumbled and economies staggered, but BlackRock emerged from the chaos with a reinforced reputation for solid risk management. The crisis of 2008 was a turning point for many. It was a time of confusion, panic, and large-scale economic disruption. But it was also a time of opportunity. And so, in 2009, when most firms were still reeling from the impact of the crisis, BlackRock made a bold move. It acquired Barclays Global Investors, a leading player in the field of asset management. This acquisition was a game changer. It wasn't just about buying another company, it was about absorbing a wealth of experience, expertise, and resources. It was about expanding reach and influence. It was about gaining an edge in a time of uncertainty. BlackRock's decision to acquire Barclays Global Investors was a strategic masterstroke. It catapulted the company into a league of its own, making it the world's largest asset manager. This move sent a clear message to the global financial community that BlackRock was not just surviving the crisis, it was thriving. This strategic acquisition demonstrated BlackRock's commitment to growth and its ability to spot opportunities in the face of adversity. It was a testament to the company's vision, courage, and resolve. It was a clear indication that BlackRock was not just a participant in the global financial system, but a leader. The acquisition of Barclays Global Investors allowed BlackRock to expand its offerings, enhance its services, and reach a broader client base. It was a major step in the company's journey towards becoming the world's leading investment company. With the Barclays deal, BlackRock's assets under management soared to $3.5 trillion, cementing its position as the world's leading investment company. In the years following the financial crisis, BlackRock continued to innovate and lead the industry. The financial turmoil that shook the world in 2008 marked a turning point for many. But for BlackRock, it was a catalyst for innovation and growth. BlackRock saw the future, and it was digital. They understood that in a world increasingly driven by data, the ability to harness and interpret this information would be a game changer. And so they turned their focus to technology, specifically the development of a pioneering risk management system called Aladdin. Just like the legendary genie, Aladdin was designed to serve its master, providing insights and solutions to complex problems. But instead of granting 3 wishes, this Aladdin granted a panoramic view of the entire investment landscape. It provided a comprehensive risk assessment, enabling BlackRock to make informed decisions swiftly and confidently. This was no ordinary piece of software. Aladdin was and still is a marvel of technology. It was a system that could process vast amounts of data, analyze complex financial markets, and predict potential risks with astounding accuracy. It wasn't just about managing investments, it was about managing risk. And it was this focus on risk management that set BlackRock apart from its competitors. While others were still grappling with the aftermath of the financial crisis, BlackRock was already looking ahead, using technology to navigate the uncertain waters of the global financial markets. The success of Aladdin was a key driver of BlackRock's growth. It attracted clients who were looking for a more sophisticated approach to investment, and it also caught the attention of investors, who saw the potential of a company that was not just surviving the digital revolution, but leading it, and lead it they did. BlackRock has consistently stayed ahead of the curve, leveraging technology to drive their business forward and set new standards for the industry. Their ability to adapt and innovate has not only made them a leader in their field, but a pioneer in the world of finance. Today, BlackRock manages over $8 trillion, making it the biggest investment company in the world. And with their continued focus on innovation and technology, they show no signs of slowing down. So, what does the future hold for BlackRock? Let's delve into this. BlackRock's vision for its future is not solely about profit margins and market shares. It's a vision that extends beyond the traditional boundaries of finance, into the realm of sustainability and environmental consciousness. BlackRock is steadfastly committed to helping its clients navigate the transition to a low-carbon economy, a commitment that is not merely a side note, but a fundamental part of its strategy for the future. The firm recognizes that the world is changing, and with it, the financial landscape. The increasing urgency of climate change and its potential impact on economies and markets around the globe is something that BlackRock is not just aware of, but actively addressing. This commitment is embodied in the annual letters to CEOs penned by BlackRock's CEO, Larry Fink. These letters have become something of a must-read in the world of finance, offering insight and guidance on the future of the industry. They are not just about BlackRock's future, but about the future of finance as a whole. In his letters, Fink has made it clear that the company's future is intertwined with the future of the planet. He emphasizes that sustainability should be at the heart of investment decisions, stating that companies must prepare for a future in which their carbon footprint will be a significant factor determining their financial viability. Fink's letters also stress the importance of purpose, not just profit. He argues that companies need to consider their impact on society and the environment, and that this consideration should be integral to their business strategies. For BlackRock, this is not just an abstract concept, but a guiding principle. In short, BlackRock's future is one that is intrinsically linked to the broader world. It is a future that is grounded in the recognition that finance can and should be a force for good, a tool for positive change in a world facing significant challenges. As we look to the future, one thing is clear: BlackRock is poised to continue leading the way in the world of finance.